Hello class. Okay, so I promised you that the next video I did would be on how to apply transactions and do journal entries. And instead of simply going through what's already in your PowerPoints and in your lecture, I thought I would walk through and explain the thought process when I'm doing the journal entries that are in your practice problems. Okay, so first, I really need you to take out a sheet of paper to take notes on, because you're going to use that sheet of paper for every single one of these transactions. And the other thing that I need you to have with you is I need you to have that resource sheet. So if you don't have that resource sheet with the accounting equation, or you don't have paper and pencil, go ahead and pause the video right now and go and get those, because the only way to learn this process is to think through it. And so that's what we're going to do together. Okay, so assuming that everybody has what they are supposed to have, we're going to look at the first transaction. Before we do any of these, I want you to write down the five-step process. And this five-step process is really important, because it's what I came up with after years and years of students struggling with certain aspects of journal entries. So the first thing that you're going to do is ask yourself, what happened? So number one is what happened. And what I mean by what happened is, can you take the journal entry, the transaction, and put it into your own words? You need to be able to picture in your mind exactly what happened that you're trying to record. And it's harder from an accounting academic standpoint than it is in the real world, because in the real world, you have the advantage of having lived through the experience. But in the accounting textbook, you're learning, terminology and things like that. So it's very important to figure out what happened, because if you don't have that one piece correct, you can't record the transaction correctly. Okay, so step one is what happened. Step two is what accounts are affected. And by accounts, I mean specific account names like accounts payable, cash, building, accounts receivable, notes payable. What specific accounts are affected? So number two is you're going to write down the accounts that are affected. Number three, did each account increase or decrease? Did each account increase or decrease? Number four, what type of account is each? And by type of account, now I'm asking, is it an asset, a liability, common stock, dividends, revenue, or expenses? So what type of account is it? And then the fifth question is, do I debit it or credit it? And that's where you're going to take that resource sheet that has the accounting equation with all of the T accounts with debits and credits on it, and you're going to say, okay, so I have an asset, cash, that increased. So if I'm going to increase an asset, what do I do? And you look at that resource sheet and you say, oh, assets increase, I'm going to debit it. So that's going to be a debit, and you're going to write DR next to it. And then you'll look at the next account and you'll ask yourself, did that increase common stock? Did that increase? Okay, then stock increases. Let me look at my resource sheet. Okay, if I increase stock, I credit it. And now you can write your journal entry. Okay, so 5 steps. What happened? What accounts are affected? Did each increase or decrease? What type of account are they? And then, do I debit it or credit it? You should have that listed out, because that and your resource sheet are going to be really important for the rest of the class. All right, now we're going to walk through these 4 transactions. So on May 15th, Deshaun Tyler opens a landscaping company called Elegant Lawns by investing $75,000 in cash, along with equipment having a $35,000 value in exchange for common stock. Okay, so what happened? A man donated equipment, wrote a $75,000 check, and in exchange for that, he was given stock in a company. Okay, that makes sense. Now, what accounts are affected? And in this case, there's 3. So what accounts are affected? You need to think of the account names, and then you need to write them down on your sheet of paper. Okay, so one account is cash because we got that $75,000. One account is equipment, and the last account is common stock. So you should have cash, equipment, and common stock. Now, next to that, you're going to write down whether it increased or decreased. I like to just put an arrow up or an arrow down. So cash, did cash increase or decrease? Cash increased. We have $75,000 more than we did before. Did equipment increase or decrease? Equipment also increased because now we have $35,000 worth of equipment. And what about common stock? Did common stock increase or decrease? So remember, this one's a little bit tricky, and we talked about it in one of the earlier videos when we looked at the accounting equation. Common stock actually increased because we're keeping track of how much stock we've issued. So common stock actually increased. Now, first of all, you should notice we have 3 accounts and all 3 increased. So is it going to be possible to balance? I don't know. Let's look. Okay, so now we want to figure out what type of account is each. So what type of account is cash? Look at your resource sheet and think about it. Is it an asset, liability, common stock, dividends, revenue, or expense? Cash is an asset. So write that down next to cash increases, write asset. Equipment. What type of account is equipment? Equipment is also an asset. So write down asset next to equipment. Now the last one's easy. What type of account is common stock? It's common stock, part of equity. Now the last thing we're going to do is we're going to ask, do we debit it or credit it? So we have an asset for cash is an asset that increased. Now go to your resource sheet. If we increased an asset, do we debit it or credit it? We increased an asset, so we're going to debit it. So write down DR next to that. Equipment is an asset. We've increased an asset. If we increase an asset, do we debit it or credit it? We're going to debit it. We've increased common stock. If we increase common stock, do we debit it or credit it? If we increase common stock, we're going to credit it. So the first thing we're looking at here is our assets, analyze the transaction. So our assets, cash and equipment went up. So 75, 85, 95, 105, 110. Do we have any liabilities? Nope. And equity went up 110,000. Now let's go do our journal entry. So for our journal entry, we figured out that we're going to debit cash for $75,000. We're going to debit equipment for $35,000. And we're going to credit, it'll credit it out, it'll move it to the right automatically, common stock for $110,000. And that's our journal entry. Now, there's one more step here. We're going to go to the T accounts. Let's do, did I save it? Okay, we're going to go to the T accounts. We're going to put the date, what was the date? May 15th. So we're going to put 5/15, and we, in May 15th, we increased cash, we debited it, 75,000. And then we also increased equipment, $35,000. And then we increased common stock, May 15th, $110,000. All right, so now we filled out the T accounts also. And we can say, check my work. Well, I know the answer isn't complete, and that's okay. Okay. General journal. Oh, we didn't save it. Okay, I have to return to question. I knew I didn't save it. That's why I got that error message. So let's go back here. May 15th, cash, 75,000. Equipment, 35,000. And common stock, 110,000. Record entry. All right, now let's look at the second transaction, and we're going to do exactly the same thing. So for the second transaction, on May 21st, Elegant Lawns purchased office supplies on credit for $380. Okay, what happened? Well, we went down to the office supply store. We bought $380 worth of office supplies. And did we pay for them? Have we paid them any cash? No, we haven't paid them any cash at all. So we bought supplies on credit. In other words, they're billing us, so we're going to pay them later. All right, so what two accounts are affected? Office supplies is one. And for on credit, that means they're going to bill us, so that's called accounts payable. So on your sheet of paper, write down office supplies and accounts payable. All right, number two, did they increase or decrease? So did office supplies increase or decrease? Yeah, they increased. We have more supplies now than we did before. What about accounts payable? Did accounts payable increase or decrease? Yeah, it also increased because we owe more now than we did before. Okay, so office supplies. What type of account is office supplies? Asset, liability, revenue, expense, stock, dividends. What type of account is office supplies? It's an asset. Perfect. So make sure you write down asset. What type of account is accounts payable? A liability. It's perfect. It's a liability. All right. So if I increase an asset, supplies, do I debit it or credit it? Look at your resource sheet. If I increase an asset, do I debit it or credit it? If I increase an asset, I debit it. Now, what about a liability? If I increase a liability, do I debit it or credit it? If I increase a liability, I credit it. All right, so the first thing we're going to do here is we're going to say we bought office supplies for $380. We increased our asset, $380, and we increased our liability, $380, and we did nothing to equity. For our general journal, we purchased office supplies on credit. We've already figured out we're going to debit office supplies for $380, and we're going to credit accounts payable for $380. I'm going to record the entry so I don't make the mistake I did before. And then I'm going to go to my T accounts. So I bought office supplies, increased them for $380, there's the debit, And I have accounts payable for 380. All right. Third transaction. You're rocking and rolling here. On May 25th, Elegant Lawns receives $8,300 cash for performing landscaping services. We received $8,300 cash for performing landscaping services. Okay, what happened? Well, we went out and we did a job, we landscaped, and they handed us an $8,300 check. So what two accounts are affected? Okay, cash is one. We have $8,300 cash. Now, what do we do about performing the landscaping services? What is that account? That account is service revenue. So we have a revenue account. We're going to call that service revenue. So our two accounts are cash and service revenue. Now, did they increase or decrease? Did cash increase or decrease? Yep, it increased. We have $8,300 more cash now than we did before. What about our service revenue? Did our service revenue increase or decrease? Yeah, it also increased. We have more revenue now than before. So we increased our service revenue. So what type of account is cash? Look at your resource sheet. What type of account is cash? Cash is an asset. What type of account is service revenue? And this one's easy because it has the word revenue in it. So that would be revenue. So now we have an asset and we have revenue. All right, now look at your resource sheet. If I increase an asset, do I debit it or credit it? I debit it. So I'm going to debit cash. If I increase revenue, do I debit it or credit it? I'm going to credit it. So I'm going to debit cash and credit service revenue. Okay, so as far as our accounting equation, we received an asset of $8,300 in cash, no liabilities, and revenue increases equity $8,300. So we balance. For our journal, we received cash of $8,300 and service revenue. Are they just going to call it revenue? Landscaping revenue, okay, of $8,300. We'll record the entry. And now we're going to go to T accounts. I brought in cash of $8,300 and I have service revenue, landscape revenue of $8,300. Put the date in there and we're good there. All right, last entry. I'm going to go back to the very last entry, D. On May 30th, Elegant Lawns receives $1,500 cash in advance of providing landscaping services to a customer. So what does that mean? So they gave us a $1,500 check, but have we performed any services yet? No, they paid us in advance. They gave us the money, but we haven't done anything for it. So we don't have revenue because we haven't done anything. So what are my two accounts? One of them's cash, but what's the other one? When we get money in advance, do you remember what that's called? We talked about it a little bit in an earlier video. When we're paid money in advance, that's called unearned revenue because we have not earned it yet. It's unearned revenue. All right, so we have cash and unearned revenue. Did cash increase or decrease? Yeah, it increased. We have a $1,500 check. What about unearned revenue? Did unearned revenue increase or decrease? It also increased because we owe more now than we did. What type of account is cash? Look at your resource sheet. Cash is an asset. Now, this is a new one. What type of account is unearned revenue? Unearned revenue is a liability. It's a liability because we owe something. We either owe the service that they want us to perform, or they're going to want their money back. So we owe something. So unearned revenue is a liability. All right, so we have cash and unearned revenue. Cash increased and unearned revenue increased. What type of account is cash? It's an asset. What type of account is unearned revenue? It's a liability. Okay, if I increase an asset, look at your resource sheet. If I increase an asset, do I debit it or credit it? If I increase an asset, I debit it. If I increase a liability, do I debit it or credit it? If I increase a liability, I credit it. So I'm going to debit cash and credit unearned revenue. All right, so let's go down here. So my asset is cash, and I increase cash $1,500, and I increase my liability $1,500, and I did nothing to equity. For my general journal, we know that we increase cash $1,500, and we have unearned revenue, oopsie, for $1,500. I'm going to record the entry. Now I'm going to go to my T accounts for the last time, and I increased cash $1,500, and I increased unearned revenue $1,500. And there we go. Our analysis is correct, our journal entries are correct, and our T accounts are correct. Okay, so that is how you do journal entries. So keep practicing. Let me know if you have any questions or concerns. I will also be posting the review for the quiz. You have my cell number. If you don't, it's 720-883-1630. 720-883-1630. And I'm happy to talk to you if you have questions. Happy learning.